Welcome everyone. We are so glad you're here to explore something that could change your financial journey. I'm Kayla, your virtual AI host who will do the introduction. Over the next 15 minutes or so, AJ will be presenting a powerful approach that could truly change your financial future. How to wipe out your mortgage in half the time without making extra payments. But first, let me ask, have you ever looked at your mortgage statement and wondered if you'll ever reach the end of it? Or maybe you're questioning if you'll ever get ahead financially, especially with rising costs and the pressure of everyday expenses. If you're feeling that weight, you're not alone, and that's exactly why we're here. Whether you're just starting out in property investing or simply looking for a smarter way to break free from financial strain, you're in the right place. Today, we'll be exploring a strategy that has already helped so many people regain control of their financial future, and it could do the same for you. AJ Krishnan moved to Australia in 1995 at just 9 years old. Growing up in a single-income household in Melbourne's eastern suburbs, he didn't have much exposure to property investing or financial guidance. Everything he knows now came from years of learning, watching, and listening to those who had already succeeded. AJ firmly believes that building generational wealth is within reach for anyone willing to take simple steps and stay the course. He has been in the mortgage broking industry for nearly 15 years, with the last 8 dedicated to helping Australians through home loans fast. His journey into the field began during the global financial crisis when a mortgage broker helped him secure his first home, despite limited savings. That experience opened his eyes to the impact of creative financial solutions, and since then, he's been committed to helping others achieve their property goals and financial freedom. At Home Loans Fast, the team are dedicated to supporting first-time property investors in building generational wealth that lasts. Today, we are excited to share some of that expertise with you and show how achievable this goal can be. In this session, we'll dive into some essential concepts like leverage and compounding and some basic statistics around property investment. We'll also walk you through how we use the payoff point, or POP calculator, using real-world examples to show the potential impact on your financial future. If you stay until the end, we have an exclusive offer designed just for you. Before we explore the concepts of leverage and compounding, it's crucial to understand why so many Australians are turning to property as the foundation of their wealth-building strategy. About 2.2 million Australians, or 8.5% of the population, own at least one investment property. Over the past 30 years, Australian property values have grown by an average of 5.6% annually, according to CoreLogic. This long-term growth underscores the reliability of property as a vehicle for building wealth. It's clear that many Australians have unlocked the gateway to financial freedom. Our job is to help you join their ranks. This is a US stat, but is relatable to Australia. New money being printed every day and put into the economy has been growing at 6.5% per year for the last 24 years. This is not a trend that is slowing down. All this money usually finds its way into assets, and property is one of the favorite. Now AJ will present the key concepts of leverage and compounding and take you through the POP calculator.
Thank you, Kayla, for that introduction. Now, I'd just like to go through the concept of leverage and how that impacts your property investing, or investing in general, I guess. So I'm just going to share my screen. This is an example of 4 people going through 4 different parts, okay? So each one of them has been given $100,000 to start off with. In example 1, let's call it person 1, he's invested, or he or she's invested $100,000, that's compounding at 9% per annum in shares. So he's getting a 9% return on his share portfolio, and after 10 years, those shares are worth $237,000. which is done pretty well. After removing the initial contribution, he's left with $137,000 of pure profit. Person number 2 has decided to take his $100,000 of shares, go to the broker and get an additional $100,000 using the first $100,000 as guarantee. So he's now got a $200,000 starting point to invest his shares with, and he's been getting a 9% return for 10 years. And that compounded return is $474,000 at the end of 10 years. Now, minus his original $100,000 and the $100,000 loan and the interest that's been charged for the 10-year period, he's going to be left with roughly around $240,000. So not quite as double because he's had to pay interest, but very close to. He's done pretty well. Now, the third person is going to say, well, you know what? I don't want to invest in shares. I'm going to invest in property. He's gone out and found a company that specializes in property investing and helped him buy a property that's getting him 7% return. And he's borrowed $400,000. So he's bought a $500,000 property, getting 7% per annum. And at the end of the 10 years, that $500,000 property is now worth $984,000. Now, minus some interest and holding costs during the period, he's left with $460,000. So as you can see, person number 3, even though he's got a lower return, has substantially made more money. And this is the power of leverage. And now, obviously, the last example is going to be even more beneficial. And this person has decided to be quite aggressive, and he's borrowed $900,000. So he's used a 10% deposit with his $100,000 and bought $1 million property. Now, that $1 million property is compounded for 10 years at 7% per annum. And at the end of the 10 years is now worth almost double. So 1.97 million. And after holding costs and interest and fees, he's left with $920,000. This is an example of 4 people that started off with $100,000, choosing 4 different parts And I've seen this happen many, many times in real life. People that decide to just hold on and not do too much, get into the market, they may do okay, they may just procrastinate. If you actually have a strategy and direction and know where you're going and have the right people to guide you, it's a big difference at the end of 10 years. And this is just 10 years. And this is not too far-fetched from reality. Okay, so now that we're all over the concept of leveraging, we want to go through the concept of compounding and how that works. How does that affect your property investing? The best way to describe this is to go through an example and illustrate this. So the magic of compounding. Now, what would you do? A genie is offering you two options. The first option is $1 million today, or you can have a 1 cent piece that doubles every day for the next 30 days. Now, the spoiler alert is that the 1 cent piece is the answer, but let's see how that works out, right? After 10 days, the 1 cent piece option is worth only $10.24. Yeah, okay, I've still got 20 days, not a big deal. Now, after day 20, I'm still a bit nervous now because it's only $10,485, and that's 2/3 of the time gone. $1 million is looking pretty good right now. Okay, and here it's the magic. On day 26, you're absolutely smiling because on day 27, you're now ahead of the option of taking $1 million up front. And basically at day 30, you've made almost $11 million. So almost 11 times more than if you'd have taken the $1 million option. What is all this? So this is Albert Einstein once said, compound interest is the eighth wonder of the world. He who understands it earns it, and he who doesn't pays it. Basically, when it comes to property investing, you need to let time do the heavy lifting for you. Just buy a good quality asset, leave it in a good, and not chop and change and sell. There's a lot of transaction costs. Just let time do the heavy lifting for you and let compounding work in your favor. This brings me to the magic formula. Wealth equals asset base times time. What you need to do as a property investor is this simple thing. You build your asset base as big as you can with the money you can afford and just hold it long term. That's it. That is the magic formula. So now that we've gone through leverage and compounding and see how that affects your property investing potentially, let's go through some practical numbers on holding costs and see how that affects your property investing. This is some of the projects that we have with our property investing partners. And we'll just run through a scenario of someone buying a $650,000 property, getting $625 a week rent. And what will it cost you weekly? Now, interest rates are on the left-hand side and household income's on the top. Scenario of someone buying a $650,000 property, getting $625 a week rent. And the assumption is that you're borrowing 100% as an interest-only repayment. Someone on $120,000 income at 6.5%, it's going to cost them around $54 a week to hold out of their pocket. Someone on $200,000, it's only going to cost them $13 a week out of pocket. And the person on $200,000 is on a higher tax bracket, and so they get more of their tax return back for holding this property. Someone on 120 and 60,000, so two people in the household, for them, it's roughly around the same as this one, so about $55 a week. Now, the interesting thing is once interest rates start dropping, if you're on the same sort of income, and these are the scenarios that are still in play, then the green boxes show how much money is actually coming into your pocket. So this property is now actually putting money in your pocket. You're not actually having to hold on to or pay to hold on to this property. So there you go. And if interest rate come down to 5, you're absolutely laughing. So this idea is that you're holding a $650,000 asset for basically $54 a week, which is absolutely amazing. And the way that would work is, the tenant is actually paying 68% of your holding cost in a typical scenario like this. The tax man is actually contributing, another 28% from their side, which is your tax money that you're paying, but coming back to you to help you hold on to this property. Your net out of pocket is really 4 to 5% to hold on to this, $650,000 property. So as you can see, it's really not going to do that much damage to your back pocket if you buy correctly and hold on to the right kind of property. So now that we've gone through leveraging, compounding, the magic formula, and holding costs, we're going to go through the main part of the presentation, which is how to pay off your home loan in half the time without making extra payments. So some of the assumptions we've made as part of this example is that you currently have a mortgage that you want to pay off. You have equity in your house that you can use to buy an investment property, and that you're willing to buy a new property in a high growth area to take maximum tax advantage that's available to you. Let's go through the home loan payoff point calculator. Okay, so we'll run through a few scenarios. The first one is a $600,000 scenario. Assume the interest rate is 6.5%. Let's assume you're going to get a 5% growth rate, which at the start of the webinar, we mentioned that the value of the property should double every 15 years. And even CoreLogic has said that, we've had about the last 20 to 30 years, we've had 5.6% growth in property. And let's assume a household income of $150,000. So initially, I just want to show this is pretty straightforward. It's a 30-year loan term. Your minimum monthly payment is this. And you'll be paying, if you held that for 30 years, you'd be paying $765,000 of interest back to the bank for having the $600,000 loan. So more than double the amount of loan you'd be paying in interest if you held it for that long. Now, let's assume you've had this property for a few years and you've got a bit of equity that you can use and you have the borrowing capacity to buy another property. Now, for this concept to work, basically you need to have an investment property. The value of that investment property needs to be roughly equivalent to your existing home loan balance. So if you bought a $600,000 property and your home loan balance is $600,000, then we can expect some results that look like this. So this dark blue section that we've introduced now is called the investment profit. So that's the profit that you've made from the investment property after all expenses, capital gains tax, stamp duty, selling costs have been taken into account. In the year 15 years and about 3 or 4 months, you would have reached the POP point or payoff point, which is home loan payoff point. So you can be completely debt-free after 15 years based on the property that you've bought, which has made you a profit high enough to completely wipe out your mortgage. And this is assuming you're just going to continue making your home loan at the minimum payment with no additional payments. And you've just bought this investment property, and we know how holding costs work. You know, over time, if interest rates come down, your holding costs for this investment property shouldn't be too high. And rents generally sort of tend to move up over time. This is how you wipe your mortgage in half, by buying a good quality property and letting time do the heavy lifting for you and using smart investment strategies to accelerate your financial freedom. I'll just do another scenario for, let's say, an $800,000 scenario. So if you have an $800,000 home loan balance and you bought an investment property worth $800,000 and that was growing at 5%. Again, something very similar. You would be able to pay it off in half the time. What happens if you bought a property for, let's say you couldn't afford an $800,000 investment property, you can only afford $600,000. It's going to take you a little bit longer, so an extra couple of years. It took you 17 years instead of 15. Hey, but still, you're completely debt-free and mortgage-free, and you've saved almost $250,000 worth of interest by doing this. What happens if you actually work with an investment property professional to actually find a property that does slightly better than the average, what's happening in the market? So you were able to get a 7.2% growth on that property compounded. So the 7.2% growth is basically that property doubling in value in 10 years time. So if you were to get that, you would then come under. So you'd get you under the 15 years. So you'd be able to pay it off in 13 years. And then if you're still able to afford an $800,000 property, then you'd be completely debt-free in just over a decade, which is absolutely phenomenal. This is everything that we've discussed all tied in. So leveraging, compounding, the magic formula, and letting time do the heavy lifting for you. Congratulations if you've made it to this point in the webinar. As promised, here is a special offer, and there's a video that will explain this to you much better.
Want to achieve financial success while enjoying a stress-free exotic holiday? Look no further than Home Loans Fast. At Home Loans Fast, you have an expert on your side helping you finance your dreams in your next property journey. Here's the kicker. When you use our service to buy or upgrade your home, avail your next investment property, or refinance your existing loans, you'll receive a free 7-night exotic accommodation voucher valued up to $1,500 to Bali, Phuket, or Mombasa. Contact us today to know more about our exclusive offer. Home Loans Fast. Take the right step in your home loan journey. Fast.
So basically, use us to help you grow your investment portfolio, and we'll give you a holiday. And just to wind things up, there's 3 reasons to work with us. Apart from the fact that we've got over 195 5-star Google reviews. Mortgage brokers, we pretty much do more or less the same thing. We've got access to the same sort of banks. We can, get the same loans from Commonwealth, ANZ, Westpac. But what is it that sets us apart? And I think there's 3 reasons why you should work with us. Reason number 1 is that for every home loan that we settle, we plant 5 trees that is legally protected for 100 years. There's more details on this on our website. We partner with a company called Carbon Neutral. Reason number 2 is that every time, the video that you just saw basically, every time you transact with us, we will give you a 7-night holiday that you've got up to 18 months to use, to 3 amazing destinations. Reason number 3 is that we have a full-time staff member and we also use AI to actively manage and make sure that the interest rate that you're on when we've done a home loan for you is the best you can get from that bank. So we constantly try and get the better deal from the bank. Sometimes banks will creep up, everybody's interest rates. And if you don't actively manage it, then you're potentially paying thousands of dollars more in interest than you should. So we do that for you. We manage and check in with the bank that you're with to make sure that they're giving you the best rate. And if they're not, we'll give you a heads up saying, hey, look, maybe we should potentially refinance to another bank because your existing lender is not doing the best for you in terms of interest rates in the current environment. Okay, so thank you again for being here and taking the time. I really appreciate it. and look forward to working with you. Take care.